All right, what I'm going to do is I'm going to continue on from where we missed off. We stopped. Okay, we stopped with the do it. Can everybody see this? Looking for the chat right now. I'm sorry. Is anybody having a problem seeing the PowerPoint slides? Okay, I'm not hearing anybody, and I don't have the chat. Oh, there it is. Okay. A little bit of a technical issue just now. Okay, so we're going to move on to review. We said that the easiest type of business organization uh, to raise capital is a corporation, because we said you can't sell ownership in yourself. So a sole proprietorship can sell ownership to other people, but since a corporation is a separate entity from itself, and in fact it's two people, you're creating a second version of yourself. You can sell off that parts of that second person. Owners have no legal liability behind investment in company. Again, there's something called the corporate veil, which legally, if somebody sues the company, they can't sue the owners of the company. Allows easy transference of ownership because of the fact that, again, it's a non-human, it's an artificial human being. Requires no legal document to establish as a sole proprietorship. All you have to do is hang up a sign. And when the owner dies, the business is ceased. Remember, in the sole proprietorship and a partnership, again, the business and the person are the same thing. In a corporation, they are different people. So when the owner dies, that's it. Okay, so take out a piece of paper and try the. Can you see these problems? Did I share this? So try this for a couple of minutes. So try to name the three business. What are the three business basic forms of business organization? They are a sole proprietorship, a partnership, and a corporation. Name the basic business form that allows a business to raise money from issuing stock. That would be a corporation. Did anybody see this?
Yes, sir.
Okay, thank you. Sorry. Uh, Name the basic business form that includes the joint ownership of the business by two or more people. Can anybody name that? Just type
Partners.
it. Good. Partnership. Name the basic business form that is easiest to set up.
Sole proprietorship.
Very good. And name the basic business form that incorporates shared control. This is a corporation. It's a little bit badly worded. Sorry about that. If you missed any of them or you didn't get any of them, the answers are available on the class lecture page, Canvas page. That would be this, and this. Types of, oh, you guys can't see. So you'll get that from here, the questions, and the answers are here. All right, let's move on. Okay, the users of accounting information. So everybody thinks that accounting is based on math and you have to be good at math in order um, to be an accountant. That's really not true. All it really is algebra. The algebra that you learned in probably in sixth grade is all the math that you need to understand accounting. Remember when your teacher put up A plus B equals C? That's pretty much it. What accounting really is accountants provide information to people who need the information to either make decisions about the organization. So what accountants do is they provide information, they collect it, and they present it in a certain way so that people can understand it. Those people are called users. And what this whole class is all about is how do we organize that information so that people can use it and understand it. That's what this class is about, and this is what 270 is about. If you think about it in that term and don't get hung up with the math, I think it'll go a lot better for you. Everything we do in accounting is based on being able to communicate with other people. Actually, two types of people. This is very similar to driving a car. When you drive in a car, for example, there are things that communicate to you. For example, the other drivers on the road will signal to you that they want to make a left or right turn, or that they're switching lanes. Other ways that we get communicated to while driving a car, for example, we stop at red lights. There's a sign on the highway that says speed limit 60. All those things are communication, are ways to communicate with drivers, either by government or by other drivers. So what we're saying is that there are standard means out there to communicate with you while you're on the road. And to be a driver, at least in the United States, you have to understand those rules. A stop sign, goes, green means go, yellow means proceed with caution. All those things are really ways to communicate what they want to do, what either government or other drivers are going to do or they want you to do. Same thing with accounting. It's exactly the same thing. We have these rules that we have to learn the way that everybody expects us to present the information. And those rules need to be followed by the accountant, the person who's preparing the information, and understood by the user of the information. The user of the information are either investors or other business people in the company. So for example, I have to be able to communicate with let's say all of you graduate and take a job as marketing managers. And I'm with we're all with the same company. Me as the CFO or accountant collects data, right, in the background. And then I present it to you in what they call managers meetings using what you're learning here. So I will present what they call a balance sheet, what we're going to learn at an income statement. And you're expected to know how to use those items and to understand what those items tell you and to use those items to make decisions in your specific job. So as a marketing manager, for example, I may tell you that sales were supposed to be 500,000 and we only sold 300,000. That's an indication to you, for example, as a sales manager, hey, I better do a better job marketing because we're not selling the product that we expected to sell. So all this is really is a way to communicate information to you. Just like if you think about it as driving, I think that's a pretty good analogy. At least I haven't come up with a better one yet. Again, we take the information. As an accountant, collect it and prepare it. And then at the end of the month, we all get together as managers and I usually present it to you. And we talk about what happened the last month. But you need my information, the information that I'm collecting for you, to understand what happened last month and what different things you need to do, what you need to do differently. Is that kind of clear, or am I just babbling here? You can tell me if I'm babbling. You're not going to be rude. I'm sitting here talking to a computer, so I don't really know. Usually I'm seeing faces out there, but here I'm not. So I don't, it's almost like I'm talking to myself, to be honest with you. So I may rattle a little bit, babble a little bit. If I do that, just say, be quiet or whatever. You're rabble. This is real hard for me because I'm talking to a computer screen. Is that a little bit clear? Yes. Yes, Edgar. It's a means of communication. That's all it is. So that you and I, me as the accountant and you as the marketing manager, can be on the same wavelength, so that we can talk about what happened in the business the last month and make decisions on what we need to do differently, if anything. Yes, perfect. The math is just the foundation. And I'm going to show you that a little bit later. We're going to get into the foundation of accounting. So we have two types of users that we're talking about. I've kind of alluded to them already. The first type of users are external users, people outside our business. These are people like grandma, who takes her money and puts it into a stock and wants to know how the stock is doing. Or maybe some of your fathers or mothers do investing. They invest in companies and they want to find out how the business is doing. So the first type of users that accountants communicate with is external users. These are people outside the organization, like investors, government agencies, people who loaned us money, those type of things. They want to know something about the business. An investor, if you were investing, if you put, money in a company, you want to know how the company did and whether or not you should sell the stock or keep it or whatever. Well, that's what I communicate, me as the accountant communicate to you via an income statement and balance sheet, which we'll talk about later. So I, again, collect this data, organize it, and then present it to outside people. And that information tells those external users what they need to make a decision. So I'm going to give them what we're going to talk about as an income statement, and that's going to show how much income the company made. And based on that, they're going to decide, do I want to keep my stock? Do I want to sell my stock? Do I want to purchase more stock? Do I want to sell a little bit of my stock? And the people who are trying to decide whether or not they want to invest in the company are looking at that and saying, do I want to put my money in this company or do I want to put my money in another company? People who loan us money, the business money, want to know whether or not we can pay them back, right? Don't you want to know if you loan money to somebody, you want to know if they can pay you back or not? Same thing. So the accountant collects the information, organizes it, and gives it to the bank. And then the bank makes a determination whether or not we'll be able to pay the money that we owe them back or not. And then the government, again, I organize information, accountants organize information, present it, collect it, organize it, and then I give the government information so that they can collect economic data and regulate me and all kinds of other fun stuff. That's the first type of user, the external user. These are people that are outside the organization. In 270, you're going to learn about the other type of user, the internal user. That's my coworkers. As I said, this is the type of user that we'll be concentrating on in this class. These users are outside the organization. They do not work for the organization. They are people who want to know information about the company, but don't have access to management meetings and stuff like that. These people do not work for the business and do not have inside access to any accounting records. They rely on somebody like me, the accounting department, to give them the information they need. Just like you rely on the government to make sure that the lights turn red, right, red when it's supposed to turn red, green when it's supposed to turn green, and yellow when it's supposed to turn yellow. And you rely on cops or police people to make sure that everybody's driving safe on the road. So far, okay? Any questions? Comments?
No.
I'm sorry? I'm sorry? Did you say no or yes?
No.
Okay. Okay, as I've already mentioned, the specific external users that we're going to be talking about are outside investors, people who want to invest in the company, or people who are currently investing in the company. Creditors are people who loaned us money, who want to make sure that we can pay it back. And government regulators want to regulate us, just like the police people want to regulate how you drive or how other people drive on the roads to make sure everybody's safe and following the rules. So investors will ask, does this company make money? That's this top piece. Creditors want to know, can they pay me back? And investors want to know how much money I'm going to get in profits. So everybody has a reason for wanting the information, to use information from the company. And it's essentially the accounting department's job to present that information to all the users. A lot easier than it sounds. I was doing it for 30 years. It's not that bad. Okay, so the next question I think should be logical. The next logical question is, where does all this start? Where, okay, Dr. Seaman, I understand all that. How does this thing begin? How does the accounting department start collecting information? Okay, so all accounting starts with what's called a transaction. And I just want you to remember that if you have a valid transaction, you have to record in the accounting records. If you do not have one, you do not have to record it. And what is a transaction? Actually, every one of you have been involved in a transaction in your life already hundreds of millions of times. For example, when you go and buy gas for your car, you are involved in a transaction. When you go to McDonald's, and I know some people don't like McDonald's, but that's the one I use, and buy a hamburger, you are involved in a transaction. When you go to Kmart or Walmart and buy a shirt that you like, you are involved in a transaction. The only difference between what you do and what the business has to do is we have to record it. We have to make a record of it. So what is a transaction? A transaction has two elements. Anytime you exchange something that you own for something you want, it's called a transaction. So going back to the examples, when you purchase gas for your car, you have cash in your hands or whatever money you're talking about. I see some of you are Spanish. I don't know if you live in Spanish-speaking countries or not, but Spain, Spanish-speaking countries have their own type of money, but I'm going to use dollars. So when you have dollars or their equivalent, and you want something else, so you have a bunch of dollars or their equivalent in your car in your hand, and you need gas for your car. You exchange the dollars or the equivalents in your hand for gas. That's what I'm talking about in exchange. So I'm giving up dollars, and in return, I'm getting back gas. Or if I go into McDonald's because I'm hungry, I'm giving up dollars, and in return, I'm getting a hamburger. Or if I go to Walmart or Kmart and like a shirt or pair of pants, I'm giving up dollars, and I'm getting in return a shirt that I like or a pair of pants that I like. That's what I'm talking about. Anytime you exchange something that you own for something that you want, it's called a transaction. You're giving up something and you're getting something in return. And as I already indicated, you're involved in transactions every day of your life. You just never thought of it that way. So let's use the example of buying an office copier machine for $4,000. There are actually two components of a transaction. The first one is, does this event involve an exchange of economic resources? So, am I exchanging resources? When I go to the gas station, am I exchanging my cash for gas? The answer obviously would be yes. When I go to McDonald's, am I exchanging my cash for a hamburger? The answer is yes. If I go to Walmart and find a nice shirt or pair of pants that I want to buy, am I exchanging cash for something I like? Yes. So that's all this first statement really means. Am I giving up something? Am I getting something in return? And that's really the first question that you need to ask. So in this example, a company wants to buy an office copier machine, and the office copier machine that they like. So they went to the office copier machine store, and the one that they like was $4,000, and they decide to take it. Well, they exchange a check for 4,000. They write a check for $4,000. They exchange $4,000 in cash for an office copier machine. Everybody okay? Am I going too fast? Yes, advertising is a transaction. Anytime you exchange anything, it's a transaction. So in advertising, I'm giving up some cash, and in return, they're advertising my business, like in a newspaper or something like that. Let's say it's a TV ad. So let's say Ford runs one of, I'm sure you've seen all the Ford ads. So they want to do an ad for, I don't know, Edge. So they pay an advertising company $100,000 to put an ad together and put it on TV. They're giving the ad company, the advertising company, for $100,000. And in return, their product is getting advertised. Does that make sense? So the term economic resources throws some people off. All it is anything. Anything that has value is an economic resource. So in this case, cash is an economic resource. Advertising, Ford putting that ad on TV has economic value to Ford. Why? Because I'm telling people I have this great product out there that I want you to buy. And what does Ford expect? Ford expects all of you to go out and buy a new Edge. The second part is, can we measure the economic impact of this transaction in monetary terms? All that means is, can we put a value on it? So in this case, in the case of the copier machine, the value is what I'm willing to give up, the $4,000. In the case of gas, let's just say we buy $20 worth of gas. I don't know if that fills your tank or not. I just popped in with that number. The economic value of the gas is the $20 that you're willing to pay for it. Let's say you buy a McDonald's hamburger for $1. The economic value of that hamburger is the value you're willing to put up with, to give up for it, which is $1. Let's say the dress or shirt or pants that you like in Walmart cost you $10. I don't know if they do or not, but let's say it's $10. The value of that shirt is the value you're willing to give up for it, $10. So the monetary, this next thing is wordy, but it really just means what you're willing to give up. If you're willing to give up $4,000, then $4,000 is the value of it. So to review a little bit, first, the transaction must involve an exchange of economic resources. Okay, I must get something, or the company must get something, and the company must give up something. If both of those elements are not there, then you don't have a transaction. You have something else. In our case, we're going to ignore it. Now, there are types of transactions, those of you who are accounting and take government accounting, there are types of transactions that are one-sided, but we're not going to get into that right now. For this class, all I want you to know is I must give the company or the business that I'm doing must give up something and must receive something. So the first question I would ask anytime I'm giving a journal entry is, does this event that you're given involve the exchange of economic resources? Am I getting something? Am I giving up something? And we'll get into that probably Monday. And that answers the question, does this event involve the exchange of economic resources? Second, the economic impact of the event must be measurable. There must be a dollar value to it. As we said, Ford exchanged dollars for advertising on TV. In this case, the value of that advertising is what Ford was willing to pay for it, $100,000. In the case we used in class, we needed a copier machine. We were willing to give, the company was willing to give up $4,000 for a copier machine. That's the monetary, the monetary value of the copier machine. If you go in to buy $20 worth of gas, you're willing to give up $20 for that amount of gas. If you go into McDonald's and buy a hamburger, you're willing to give up $1 for that hamburger. If you go in to Walmart or Kmart and buy a shirt, you're willing to give up $10 for that shirt. So the event must meet both of these requirements. Does the event involve the exchange of resources? Can we measure the economic endpoint of this transaction in monetary terms? So that's the starting point. If the answer is yes, then you move on. If the answer is no, you throw up your hand and say, I don't have to do anything. And that means no to either one of these questions. So the first thing you need to ask yourself is, does whatever I'm looking at involve an exchange of resources? And that means, did I get something? Did I give up something in return? Or did the company get something? The company get something in return? And the second is, can we measure an economic impact? Which means, how much money am I willing to give up for it? So far, okay? Everybody okay? Everybody fall asleep?
Question.
Go ahead.
Are loans a transaction? If so, how?
Okay. Yes, they are. So I'm a business and I need to borrow money. What happens? I go to the bank and they give me cash. In return, I promise to pay them back. So that event involves exchange of resources. I'm taking money from them and in return, I promise to pay them back. Does that make sense?
Yes.
You sure? You didn't sound like it.
Like okay, so like with the promise, if they can't fulfill their promise, then it's no longer a transaction, right?
If the company can't fulfill their promise,
Yeah.
then then in accounting terms, the loan gets written off. So,
Mm-hmm.
so that's a little bit of more advanced than I want to get in this class. But yes, you are right, then it's not a transaction.
Okay.
So when we first take the money out, we record a transaction. If the business does not honor the loan by paying it back, the transaction kind of goes away. Does that make sense? I'm trying not to get too complicated here.
Yeah.
But for our purposes, that's kind of the way it works. I mean, there are accounting things that we do, but from the perspective right now of where you are, that's what happens. So I purchased $500, 500 reams of paper from Office Supply Store. Is that a transaction? Let's say I pay $1 for each ream. Well, ask yourself, did I get something? Did I give up something?
Yes, it is.
So I got 500 reams of paper to use in my copy machine. I gave up $1 for each ream or $500. So that would be a transaction. This event represents an exchange of one resource, ream of paper, for another resource, cash. So it meets requirement number one. I'm getting something, I'm giving something up. Giving up money for paper. The exchange can be measured in economic terms, dollars. In this case, we're going to pay $2 for each ream of paper. So we gave up $1,000. And the value, the monetary value of that transaction is the $2,000 that I'm willing to give up. Our top salesman, Joe Smith, called our biggest customer and discussed the result of last night's football game. At the end of the call, the customer did not place any new orders. Is that a transaction?
No.
No, because we didn't exchange anything. We had a nice conversation, but that's about it. We purchased a new delivery truck for 25 grand. Anybody? It would be yes. We exchanged our cash, $25,000 worth of our cash, for a delivery truck. So we gave up $25,000 in cash, and in return, we got a new delivery truck. Paid the utility bill for the previous month in the amount of $50. Anybody?
Yes.
Yes. In this case, the utility company provided me with utilities to run my business, valued at $50. In return, I promised to pay them $50. Paid employee salaries for previous work week in the amount of $50,000. Anybody?
Yes.
Yes. Paid all rent on the office building.
Yes.
Purchase materials.
Yes.
Yes. Good. Anybody having a problem? Hired new employee, but the employee has not started yet.
No.
No, because we didn't get anything yet. We didn't give up anything yet. We don't give up anything until he or she works. Purchased a new machine for 150 grand.
Yes.
Yeah.
Yes. Purchase materials for resale.
No.
Yes.
Yes. I purchased the materials. I got the materials. So I got the materials, and in return, I promised to pay the vendor in 30 days. So this is similar to a loan. Goodman and Ross, a professional law firm, provided legal services to us and charged us $40,000.
Yes.
Yeah, we got legal services, and in return for those legal services, we gave up $40,000 to Goodman and Ross. Paid to have repairs performed on a delivery truck.
Yes.
Yes. We got our truck repaired, and in return for that repairs, we paid $400. So in review, this criteria should be, does it meet the transaction? And if it does, then we record it. If it doesn't, like for example, the salesman talking about last night's football game, didn't. So we don't do anything with it. All right, that's all I have today. Today's will be recorded, by the way, and I'll post it. Does anybody have any questions?
Is this all in the first chapter of the book still?
Well, this is not really the first chapter. This is a combination of what the author did was he put some of this in the first chapter and some of this in the third chapter. So what I did is I made up my own chapter with all the information I want in one chapter. So this is part of 1 and part of 3. But instead of jumping around, I'm doing it as one presentation, as its own chapter. Does that make sense?
Yeah, so by next class, what chapter should we be up to, like reading wise?
By next class, you should still be making sure you know these PowerPoint slides. We haven't hit a chapter yet. We won't be
Okay.
hitting
Thank
3,
you.
which is the first chapter, until Wednesday. Again, I tried to what I'm trying to do here is instead of jumping around and having you read 1 and 3 and jump from page to page, which is what I used to do when I used to teach this class, I decided to put it all in one section so I can present it as one section, but it's not a chapter in the book. So right now, all I'm expecting you to do is do the homework, look over the PowerPoint slides, and make sure you understand what I'm talking about. You'll be fine. Is that okay?
Yeah.
If you want to
Yeah.
review the chapter, it's 1 and 3.
And the homework's on Canvas already?
Yes. You should actually be able to see it from yesterday. If you don't, send me an email and let me know.
Is all of the homework going to be on Canvas, or is it
What?
going to be like on Cengage too?
No, I'm not using Cengage.
Okay.
This is actually a Wiley book that we're using. So I have access to Cengage, but you guys wouldn't. At least I don't. How many of you, did any of you buy the book outside the bookstore? It doesn't matter. Because I'm thinking that if you all bought it within the bookstore, you may have access to Cengage anyway. Go ahead. What were you going to say?
Oh, I got my book online through Cengage,
Okay,
so
so
I
then
have
it works. Okay.
access to Cengage.
You have what?
Access to the Cengage content because I got my book online.
Oh, do you?
Mm-hmm.
Okay, I didn't know that.
Mm-hmm.
Okay,
Yeah, I already had Cengage from another class, and I could just look up the book on there.
what?
I had already had Cengage from another class, so I just looked up the book on there, and it was.
Okay. I didn't know if all of you would have access to these homework assignments. A lot of times I do the homework. I like the homework assignments on Cengage a lot. Better than the book, our book actually. But I wasn't, in the past, there's been an issue with people who bought the book online used getting access. That's why I put everything in Canvas. I'll meet with the bookstore and see what I can do there. If I do put it on Cengage, I'll have a link from Canvas to the Cengage page. Just like all the other links. Again, if you have a problem with the link, send me an email.
Just to make sure on the homework, when you say page 1-26, do you mean page 26 on chapter 1?
Yes, yes,
The multiple choice question?
yes.
Okay. All right. Thank you.
All right. If that's it, everybody have a great day.